So you've seen the ads about home equity investment programs, and you understand that you can get a lump sum of cash without monthly payments. But you're probably wondering exactly how does that work and how much do you have to pay back? And the short answer is nobody knows the exact figure you're going to pay back in the future because A, they don't know when you're going to pay it back, and B, they don't know what your future home value is going to be. Let me explain what I mean. So on a home equity investment program, say that you borrow $40,000. And let's say that your home is worth $400,000. So you're essentially borrowing 10% of your current day's equity on your property. Now, let's say you keep it for 10 years. You have $40,000, you do whatever you need to. Pay off debts, invest in a business, whatever you're going to do with that money. And you keep that money for 10 years. And then in 10 years, you decide, okay, it's time to pay it back now. And you simply want to keep the home and just pay off that lien. Well, what's going to happen is they're going to do an appraisal on your property 10 years from now to determine what the current value is. And then based on the numbers I've seen, you're typically going to see 15% equity going back to the investment company, or 18%, or somewhere in that range. Now, there are definitely some factors. If your home doesn't appreciate that much, or if it stays kind of stagnant, or if it's just slightly, or if there's, if it shoots up, there's definitely some variables, and there's some calculators I can show you, best case, worst case scenario. But generally, you're going to see 15 to 18% return in that future equity. Now, what does that actually look like in numbers? Well, you might pay $70,000 in the future for the $40,000 you borrowed today that you had zero payments for 10 years on. A lot of people see that and they think, well, that's almost double the money that I borrowed. And that's true, and that's the math, but here's the thing. What are your alternatives? Number one, if you are currently paying off high credit card debt with that $40,000, you're saving a lot of money in interest over that 10-year time span. Number two, if you compare doing a home equity loan, you have to look at what are your total monthly payments over the 10 years of the 10-year home equity loan. And I assure you it's going to be significantly north of $40,000. Depending on your interest rate and other factors, it's probably going to be in that $60,000, $65,000 range. Could be lower, could be more, but the reality is you're also making a monthly payment back on those. So a home equity investment program is beneficial for the right situation. It is a tool, and it's one of many tools I can help with to help manage your home equity in a smart way. So follow me for more info, and if you're interested in managing your Michigan home equity, I have more content like this for you.